So Bitcoin is the most sensitive to global liquidity. It's going up at about 8.9 times sensitivity compared to gold's about 1.4% times, something like that. I project that Bitcoin will continue to go up faster than fine art or collectibles or gold or real estate. And so that basket by 2030 should be about 1.3 quadrillion. By 2040 should be about 3.5 quadrillion. So the question then becomes, like a venture capital perspective, if that's the total addressable market, what percentage could Bitcoin capture of that market? So if Bitcoin can get 1.25% of that basket, 1%, by 2030, that would put it on par with gold at about $21 trillion, or it'd be $1 million per Bitcoin. By 2040, which is about 15 years from now, if Bitcoin could get 8% of that basket, it would put it on pace to be about $14 million per Bitcoin. Now, is 8% realistic, or does that seem too big? Well,
Mark Moss starts off with an interesting viewpoint. The global financial system is undergoing progressive adjustments that are happening step by step rather than becoming abrupt shocks. Many people anticipate a sudden reset or a spectacular collapse, but Moss says history doesn't operate that way. Over time, financial institutions, empires, and currencies deteriorate, with minor fissures gradually growing into larger ones. This protracted process includes the push for new systems, the emergence of alternative assets like gold and Bitcoin, and the waning of faith in the dollar. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And you talk about the reset, that it's not a crash, that it's a reset. Can you explain a little bit about that?
Yeah, so, I'm an optimist. I believe that the future is so abundant. We are about to see the greatest era of prosperity in front of us. But there's a lot of doomers, and they're going to warn you about the market crash coming and the end of the dollar, like it's some imminent event. Like, any day now, the dollar is going to crash, the world's going to be over, the financial market's going to crash like any day. And it's this doomer narrative that really came from the gold space. The only way to sell gold is to tell you that everything's going to fall apart and there's this doomsday scenario where you need gold. But Bitcoin is technology. Bitcoin is about hope. And so what I was talking about is, yes, the dollar is crashing. It's a process. It's not an event. It's not like in 12 months or 24 months it's going to happen. It's happening. The dollar continues to lose purchasing power. And in that video specifically, I was talking about how the US government actually wants the dollar to continue to devalue. They want it to get weaker. And when you look at the dollar's strength as measured as the Dixie, measured to other currencies, we can see that we're pretty high historically. The dollar's very strong compared to historical median right now. And so we want to bring that down to a more historical level, which might be a 15 to 20% devaluation from here. And so when that devalues, then the converse of that is asset prices go up. Now, not all asset prices go up at the same rate. Bitcoin is the most sensitive to that global liquidity. So as the dollar goes down and the global liquidity goes up, then Bitcoin will go up at a faster rate. The dollar measured against the Dixie, the dollar index, so that's measured against other currencies. So when you measure the dollar against the euro, which is the main component of that basket, or the yuan, or the whatever, the peso, the bolivar, whatever, when you compare the dollar to other currencies, it's very strong. When you compare the dollar to gold, or to Bitcoin, or to real estate, it's very weak. So when you look at charts and you see the dollar's devalued 90%, 90% compared to what? Compared to hard assets like gold. But it's strong compared to other currencies. And the reason why that matters is because we're talking about resetting global trade. And so when you're trading, when the US is trading with China, if the dollar's too strong, it makes our exports too expensive. So nobody wants to buy our exports. If the dollar gets weaker, it's easier for us to trade, right? And that's why we get these currency wars happening between these nations, because each nation is trying to make their own trade balance, their own goods more competitive on the global stage. So yes, so they're trying to make it weaker to other currencies. And when I said it's already weaker, when you look at it compared to other currencies, it's historically high right now. And they want to weaken it compared to other currencies, which will also weaken it to gold and Bitcoin and houses, etc. But basically, if we look at, as the world continues to increase the money supply, that money goes somewhere. We don't want money, we want the goods and services that buys us. So as they increase the money, the basket of goods, it appreciates. So right now, we look at store of value assets, and they're about a quadrillion, $1,000 trillion. So that's gold, art, real estate, equities, bonds, cash, etc. If we continue on the path of increasing the money supply that we've been on at about 10% a year, so we go, okay, so the money supply expands by about 10% a year. That basket expands about 10% a year, but not each asset goes up at the same rate. So Bitcoin is the most sensitive to global liquidity. It's going up at about 8.9 times sensitivity compared to gold's about 1.4% times, something like that. I project that Bitcoin will continue to go up faster than fine art or collectibles or gold or real estate. And so that basket by 2030 should be about 1.3 quadrillion. By 2040 should be about 3.5 quadrillion. So the question then becomes, like a venture capital perspective, if that's the total addressable market, what percentage could Bitcoin capture of that market? So if Bitcoin can get 1.25% of that basket, 1%, by 2030, that would put it on par with gold at about $21 trillion, or it'd be $1 million per Bitcoin. By 2040, which is about 15 years from now, if Bitcoin could get 8% of that basket, it would put it on pace to be about $14 million per Bitcoin. Now, is 8% realistic, or does that seem too big? Well, if we look at it from that lens, we know that Uber and Airbnb both captured 10% of their market in less than 10 years. So we're talking about Bitcoin getting only 8% in decades. And so to me, it seems sort of bearish, sort of conservative. But those would be some projections that I'm looking at.
Mark Moss makes a crucial observation. Those between the ages of 30 and 50 are the most equipped to comprehend the changes of today and truly benefit from them. Since they've been in both worlds, they experienced the 2008 financial crisis, grew up in the old analog era, and are now directly witnessing the explosive growth of digital technology. Although younger generations are adept at technology, they frequently lack the financial and historical background necessary to put things in context. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Larry Fink, the largest asset manager in the world, buy Bitcoin. Ray Dalio, largest fund manager in the world, buy Bitcoin. President Trump, president of the United States, buy Bitcoin. Your cousin, oh, Bitcoin's a scam.
It's so true.
And it's like, look, guys, like, things change. And like, you need to change your mind. Like, Michael Saylor was against Bitcoin in 2013, right? He changed his mind. And so intelligence really is the signal of you being able to change your mind and take action. And so I think that's the single biggest thing that's going to hold people back. Understands it's the most, I would say 30 to 50-year-old range, because they're old enough to have seen the damage done by the great financial crash, understand the dangers of the fiat system, but still young enough to grasp technology and how it's reshaping things. And so there's sort of this middle generation. They saw the world before the internet and they understand the dangers of fiat. They still understand gold a little bit, but then they understand the tech. Obviously, the younger generation, the 16-year-olds, they were just raised on it. They don't know any different. But they don't know any different, but doesn't mean they understand it. They don't understand the need for it, the mechanism of it. So I'd say probably the 30 to 50-year-old generation. I do think that Bitcoin eventually becomes the unit of account that we start to price things in. I'm predicting that happens somewhere around 2050. Maybe a little bit past, so about 25 years from now. Already, a lot of Bitcoiners that we know already price things in sats already. I was talking, maybe a little spoiler alert, but I was talking with Marty Bent earlier, and he's working on a product that everything that you look at on the website instantly converts dollars into sats.
No way.
So we can start to be seeing it that way. But I think that we'll eventually price everything in sats, and I think that's about 25 years, but no reason to price that in gold. We'll break down my total portfolio, and then we'll break down the Bitcoin side of it.
Okay.
First thing I would say is that there's levels to this game. So you see a lot of people on Twitter or X talking about, sell your chairs, go all in on Bitcoin. And that's cool when you got a couple $1,000, right? If you have a couple 100 million, obviously you own different things. For me personally, it's my businesses. So multiple businesses I have. That's one. Real estate is another piece of it. And then the third is my Bitcoin sort of tech plays. The business side is where we make the money. That's where we create the wealth. And then I buy real estate for tax efficiency. So I buy real estate so I don't have to pay tax on the money that I make. And then the after-tax dollars, which are more money, then those goes into some of these Bitcoin tech plays. So on that side, it's specifically Bitcoin, pretty much all Bitcoin. And then I have a fund, so the Bitcoin Opportunity Fund. So we're investing into businesses that are building on and around the Bitcoin ecosystem. So the majority of that in Bitcoin, some of that in the fund where we're investing into these businesses that are building on and around Bitcoin. And then a smaller piece that's in some of the more speculative plays, so a lot of these Bitcoin treasury plays. So we're getting into all of those, both in the fund and personally I'm investing into these companies as well. There's some convergence of AI and Bitcoin coming together where AI agents are working with Bitcoin directly. So I'm investing into some of that as well. And those are small percentages of my portfolio, but the majority of that would just be Bitcoin. I talked about around 2030 is where I think this will really start to take off. And so already we're seeing, so for example, a big area that we invest in is Bitcoin mining. And in the Bitcoin mining space, we have data centers. And a lot of them are now bringing on AI data centers, high compute is what we call it. So we're already starting to see sort of these Bitcoin miners be Bitcoin and AI data centers, if you will. So some convergence there. But specifically what I'm thinking is that Bitcoin is open, borderless, permissionless, all of these things. It's also personless. So you don't have to be a person to have a bank account. And so now we have the rise of autonomous AI agents. So I can basically program an AI agent to go hire other AI agents to go do tasks for me. Research, write, build websites, run marketing campaigns, things like that.
And you would pay them in Bitcoin?
Well, yeah, so I would give my agent the ability to go do all these transactions on my behalf, and they can have a wallet, and it can have Bitcoin. And it can go do these things, and it can spend the Bitcoin. It can hire other AI agents to go do these things for me. And we've already started to see this. So for example, one AI agent, this has already been done, can go do research and find the best online business. Then it can go write the business plan. Then it can go find domain names to match. And it went and it bought the domain name using Lightning to do that. So we're already starting to see this happen.
Mark Moss presents a futuristic vision that connects Bitcoin, technology, and the larger economy in a way that is both thrilling and unavoidable. By 2050, he thinks, Bitcoin will be more than simply an investment. It will be the unit of account used to determine the prices of products and services. Bitcoin users who value things in SATs instead of dollars are already beginning to make this change, and new tools are being created to facilitate this move. Moss, however, is realistic about how to create and safeguard wealth in the present, as well as looking decades into the future. True wealth comes in stages, he explains. According to him, it begins with businesses, which produce value and revenue. For tax efficiency, that money is subsequently transferred to real estate, and for long-term growth, it is finally invested in Bitcoin and Bitcoin-related ventures. He is also making investments through his Bitcoin Opportunity Fund in businesses that are directly leveraging the infrastructure of Bitcoin, as well as some of the more innovative fields, such as Bitcoin mining, treasury tactics, and the combination of Bitcoin with artificial intelligence. Things start to get extremely intriguing at this point. Moss emphasizes how Bitcoin and AI will probably combine in ways that most people aren't even considering yet. Programs that are autonomous and capable of conducting research, planning, executing, and even hiring additional artificial intelligence agents will require a means of conducting transactions. Although they are unable to accept currency payments or open bank accounts, they are able to hold Bitcoin. Early examples of AI agents using Bitcoin and the Lightning Network to purchase domains, pay for services, and carry out microtransactions at breakneck speed are already available. In the next 12 to 24 months, this area could blow up. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.